I think my top one is Roth conversions. The
Mm,
opportunity to convert usually your IRA money to a
mhm.
Roth IRA because you're in a particularly sort of anomalously low income and low tax rate year. We have a
Yeah.
lot of clients who have taken sabbaticals, so they have intentionally
Mhm.
not worked and not earned income.
Mhm.
And then over the last year or two, we've had a couple clients who have been involuntarily not
Yeah.
working,
Yeah.
and that sucks, and we wish it were different. The silver lining is, hey, perfect opportunity to, at sort of low tax cost, move a bunch of money from this pre-tax account, where if it stayed, 20 years go by, now you're retired and you're taking the money out, you have to pay taxes on it then.
Mhm.
Move it to a Roth now. You are voluntarily paying taxes on it now,
Yeah.
but we are expecting you to actually pay a much lower tax rate on it now than if you did it 20 years from now. And once it's converted to Roth, of course, it has the rest of your life to grow and then come out tax free.
Yeah, that's a good overview of that idea of the Roth conversion. To your point, for the listener at home, if you and maybe you and your spouse are working, and maybe you're in a higher tax bracket right now, so maybe you were landing in like that 32% bracket federally or the 35% bracket federally, and then maybe due to a sabbatical or due to layoffs, you
Mhm.
have time off. Right now, with that, if you have good planning, you probably have cash to cover that with an emergency fund and maybe a taxable account that you can be mindful of how much you're taking in taxes. But what that means is you're going to have virtually no income that's on your federal tax return. So you can go fill up those lower buckets, and it is a progressive tax system. So it's not like, when you were working before, you were paying 37% on every dollar in the tax top bracket. Everyone pays the 10% bracket and then the 12% bracket and then the
Yeah.
22%
Yeah.
bracket and so on and so forth.
Yeah.
But so what you can do in those years when you have virtually no income is you can just go fill up that Roth, make that conversion, pay those taxes, and now you get to let that money grow tax free forever. So yeah, I
Yeah.
fully agree. That's something that we've definitely looked at with clients in those sabbatical years.
Mhm.
And it also is something that we'll look at with clients who are retired, who are in these kind of what we'll call the gap years
Yeah.
between when they made a salary and when Social Security is going to kick in, because we have virtually no income and we can really do that again and again for the same purpose.
Yeah. And that is sort of the traditional age or stage of life at which Roth conversions are discussed.
Yeah.
Which is why I love being able to focus on people in their 30s and 40s, where you get an extra, 20, 30 years of growth in that Roth IRA
Yeah.
because you get to do the conversion so much earlier.
Yeah.
I will
If you're
say one
doubling
of
money every 10 years, right?
yeah,
If it's a 7% rate of return, then you're giving it 4x in that
yeah.
period of time. It's pretty awesome.
One of my personal biggest financial regrets is when I started this firm, we had zero income for 1 year, very little income for the next year. And I mean, I was just too overwhelmed with starting a business to have my
Mm-hmm.
mind anywhere else. But oh, what a perfect Roth conversion opportunity that would have
Mm-hmm.
been for us.
If only you'd had a financial advisor.
Right? Well, I'm looking for one now. So soon, no more giant missed opportunities.
Yes, this is exactly why advisors need their own advisor, because you were so focused on doing other things, you didn't look at that
Right?
opportunity when it was in front of you. That's why we work with lots of clients as well. Yeah, a similar along the same vein of
Hmm.
a Roth conversion is there's this idea of tax gain harvesting. Is another opportunity that clients can take if they're in a year when income's low. Right. So there, what we're doing is we're not converting from a IRA to a Roth IRA and having taxable income. We're just saying like, hey, I want to take the capital gain rate on I'm just going to make up that I used to work at Microsoft and have a lot of low stock basis. I want to go sell my Microsoft, lock in that gain, right? You could, if you really wanted to, you could buy Microsoft back right away. If you
Hmm.
wanted, you just have a higher basis now. Or you can go divest into other things, diversify into other things. But it's a lovely way to be really, really mindful and beneficial about um, reducing the taxes owed, but also
Over your lifetime, right? these
yep.
these two strategies or tactics we're talking about, obviously we're like actively incurring more taxes this year. which is
By
like,
doing those 2 strategies,
are
exactly,
you
they're
like
kinda
the
tied
dumbest
together.
financial advisors ever? But what we're really focused on is how do we minimize taxes for our clients? Or how do you minimize taxes for yourself over the course of your whole lifetime?